Okay, good afternoon, everyone. Thank you so much for being here. We are excited to have you here today. Excited for you to hear about our great topic and our wonderful presenter. I wanted to introduce you guys to Tom Lonnie, who is a leader in guiding real estate investors to become their own banker. Tom did a main stage presentation last year, and he's actually speaking this year at our upcoming event in Phoenix on March 28th and 29th. So if you're not planning to be there, I'll definitely look into being at that event and hear him live on the main stage. Our own CEO, Eddie Wilson, actually follows Tom's plan he's going to share with you today. Tom is going to talk to you about how to make your money more efficient. So, welcome, Tom Lonnie, everyone.
Thank you, Carmen. Can you guys hear me okay? Awesome. All right. Well, I'm really looking forward to doing this presentation and to spending some time with you. I want you to know that I had just recorded a presentation a couple of weeks ago at a real estate investors event that I thought would really do a good job of explaining how this all works and how to use your money at three places at the same time. So I'm going to go ahead and play that presentation for you all. And it's very short, so it's engaging and it doesn't take a long time to watch, but it does a really nice job of encapsulating everything in a live setting. And while that presentation is going, if you would mind, please, if you have any questions, there's a Q&A button at the bottom of your screen. Just enter the questions in there, and I will be happy to go over them at the end of the call. We have plenty of time to go over any questions that you have. So feel free to just pile on with the questions, and we'll answer them when I'm done with the video. So I'm just going to take a minute here and switch over to this live video, and I will look forward to talking to you guys live on the other side. So what arrows came your way in 2023? So we've been talking a lot about stuff. There was high interest rates that happened 2023 that caused a lot of issues in the market. There was banks liquidity tightening. And what do I mean by that? That's where the bank is just saying, we're done loaning right now on fix and flips. We've used up all of our available capital and we don't have any more to loan right now. We had new home construction, which when these new home builders are buying down rates, that is a major problem because people can get into the house, a new house for the same rate as a fix and flip. So that came away in 2023. Financial cushion was thin for a lot of folks, okay? And it's really important to have some margin in your financial life. Really important. For me personally, financial fraud. I was invested in a deal for the last 4 years that is currently under investigation from the SEC. So you guys got to really watch who you're dealing with and who you're placing money with. What arrows are coming your way in 2024? I'm trying to help you guys understand how to really put yourself in a position of being protected as much as possible. I believe in shielding your money while using it in 3 places at the same time. I'm going to teach you guys how you can use your money in 3 places at the same time. A friend of mine has this amazing ability to create images by just telling a computer what he wants the image to do. So he put in, I want your average real estate investor to be shielding his wealth. What would that picture look like? And this is what the AI engine came up with. So it's this dude holding a pie pan, which I absolutely love it. So this is not what my picture for you is, okay? That's the average real estate investor shielding his wealth. So what does he have there? He has weak protection. He has a thin financial reserve. He has an uncertain future, relying on banks. Okay, he has to go and get loans from banks in order to make everything work. And his money is only working at one place at a time. So what do I want you guys to do? I want you guys to look like this guy. All right, he's ready to crush it in 2024. He's got maximum protection. His wealth is compounding every year. He has a tax-free retirement. He's got a privatized bank that he can utilize when he needs it. And he has his money working at 3 places at once. Okay, so how does he do this? Like Bill was talking about earlier, he uses specially designed life insurance. Now this is max funded whole life insurance that we're putting in as much capital as possible for the least amount of insurance in order to create a line of credit inside the life insurance policy. And it absolutely works amazing. So the reason it works is because access to a line of credit using life insurance puts you in the position of being the bank. So the question is, why would you want to be the bank? Okay. The best way for me to explain it is just give you an idea of how this works. This is an awesome picture that I had from a bank from the 80s. And you can see the bank is paying you 2.5% during that time for checking. And at that time, the bank was charging 4.2% on a home equity line of credit. So raise your hands, guys, if you think the bank is making 1.7% on that deal. Does anybody in here think that's how banks make money? No, I don't see any hands going up, and I'm really thankful for that. So that is not how it works. We'll take a quick look at how it works. And the way you can see, running it through just a standard financial calculator, you put in -2.5 present value, 4.2 future value, 0 payments over 1 year, and that's actually a 68% rate of return. So the difference between 2.5 and 4.2 is 68%, and the banks don't lend their own money out. They lend out their depositors' money, and that is why they make these kind of spreads, and that's why they make these amazing returns. So how can you be in the position to do this exact same thing? Is you create a life insurance line of credit by overfunding a life insurance policy, and then you pay interest to the insurance company for the use of their money at a low rate, and your money's still growing. And then you earn money like a bank in your flips. So if you were paying 6 and earning 12, question, do you guys think you're making 6% on that deal? Anybody think that? No, I got nobody. So you're right, you're not making 6%. You're making a 100% return by spending 6 and making 12. And guess what? Your money is still growing inside the policy. You're still getting a dividend. It's very, very similar to a home equity line of credit. I know you guys all understand home equity lines of credit. So I want to show you the difference between a home equity line of credit and a life insurance line of credit so you can compare them and understand how they work. So with a home equity line, the credit line amount is fixed. And with a life insurance line of credit, the credit line increases every year. And with a home equity line of credit, the home equity is the collateral that you're pledging in order to get this access to the capital. And this is an important point. In life insurance, it's the cash value. It's not the face value or the death benefit of the policy. It's the equity or the cash value. So if somebody has, for example, a $1 million term insurance policy, they don't get access to a $1 million line of credit. And that's not how this works at all. This is where you're overfunding a specially designed whole life policy, and I'm going to give you numbers in a second, but then you access that cash value as collateral. So with a home equity line of credit, using it impacts your credit score, right? So if you have a home equity line and you pull it, that's going to lower your credit score and affect your debt to income ratio. And there's no impact to your credit score on a life insurance line of credit. And there is 0 earning potential in a home equity line of credit, and you have a growing amount of this line of credit every year through dividends with a life insurance line of credit. Your home value can decrease, and that can cause your equity line to get shrunken by the bank because they're in control of it. And the life insurance line of credit never decreases. It cannot go down, okay? So there is one additional thing, is that they're difficult to get, right? You have to do what I call a financial colonoscopy, right? To get a home equity line of credit. You have to get your house appraised. You have to go through financial underwriting. It's just a big it's a big deal. But with a life insurance line of credit, it's guaranteed. You have guaranteed access to the capital. This is a basic structure that shows one way that I put these together. And there's a few elements that you need to know here. One of them is that you have a required amount of money you have to do each year to make this work. That's the minimum amount. And then you have extra capital that is optional that you can put in. So this required amount is what I call the have-to money, and that is your base premium in your term insurance rider that's blended into the policy. And then you can also do a lump sum amount going in, and I'm going to show you in just a second with real numbers how that works, but I want to make sure you guys understand the framework of what it is first. So you have an extra amount of money you can put in the first year to fund this, to create the line of credit, and then from year 2 on, you have a cap and a floor, and then from year 3 on, you have a catch-up provision for anything you were short in year 2. I'm going to show you guys some real numbers, and these do not necessarily mean that you have to do these numbers that I'm showing you. It's just an example of a standard 40-year-old male who came to me and said, I want a $100,000 line of credit to start. This doesn't mean you have to start with these numbers, but I want to give you an example. This is what it looks like. All right, you have a $26,000 minimum. That's the have-to portion. And then you have a $108,000 lump sum for a total premium of $135,000. What does that do? Right away, it creates a $100,000 line of credit. So you do not have to wait 7 or 8 years to access it. You can access this $100,000 line of credit after 30 days. The asset that you're purchasing in this case is $2.8 million of permanent life insurance that's never going to go away. So it's very cool because, at the very beginning, you've got this amazing asset that's going to create generational wealth, and you have a line of credit that is also going to compound and grow. So as this thing grows, you can see by the 4th year, on a cash-on-cash basis, you're putting in $50,000, but the policy is projected to grow by about $53,700. So you're actually have more money in on the 4th year than you put in. And then by the 8th year in this particular policy design, you're fully capitalized and all the money you've ever put in is now available to borrow out. And you've had this amazing life insurance product the whole time. So this just keeps getting better. And what really, really blows your mind is as this thing progresses, it starts to do a hockey stick on the compounding of your wealth. So by the time the guy's 67, he's put in about 1.4 million, but that's turned into 2.8 million. So it's doubled just inside the policy, and he's been able to use that money in his business as well. And oh, by the way, the life insurance amount has gone up to $4,975,000. And this is the best part, it's creating $186,000 of tax-free retirement income. So there's a lot of moving parts here and a lot of stuff this can do. And you can see that $186,000 continues until he's 90 years old. Okay, and at 90 years old, there's a $4.6 million loan amount that is going to get paid off, not by him, but when he passes away, the life insurance is going to pay off that $4.6 million, and then he's going to have a net $778,000 left to still go to a beneficiary. $2.8 million in a life insurance policy can produce way more tax-free retirement income because of the ongoing dividends than $2.8 million in a stock portfolio. Just bottom line. It's just a better place to have capital. The money in 3 places at once, where are they? Number 1, you have a guaranteed cash value growth. Number 2, it serves as collateral for your investments in your real estate flipping business. And the 3rd place is it has this life insurance component that creates a family legacy. So those are the 3 places it works at the same time. I know it's it's easy to just make money and put it right back into your business, okay? And that's what most people would tell you to do. Just make money, funnel it back into your business, make money, funnel it back into your business. But at the end of the day, if you can add one additional step in there, make money, run it through a policy, let that policy compound and grow forever, and then use the money in your business, you're going to be creating generational wealth. And it'll absolutely change the trajectory of your family. So thank you guys so much. I really, really do appreciate it. We'll talk soon. Thanks.
So that was the presentation that I just did a couple of weeks ago. And look, when I finish these presentations, I'm going to go into Q&A in just a second, but the first question that I get all the time is, can you do one of these plans for me? What does that look like? How much can I put in? So the answer is yes. I do this all the time for real estate investors and people who are interested in, using their money at more than one place at a time and earning returns like a bank. I do it all the time for people. And I'm going to show you guys exactly what you need to do that. So what I'm wondering is, John, could you drop a link in the chat to this intake form? And I'm going to share my screen really quick. Hold on. And kind of walk you guys through how this would actually look. So if you happen to be at a computer, you can hold your phone up to the screen. And if not, you can go to this website, and hopefully there'll be a link in the chat as to how to get there as well. Yes, I found it. Link is in there. So what you do is just go here, and here's what it's going to do. It's going to ask you your basic contact info that I absolutely have to have in order to give you an idea. The where you live is actually a key component of this, because insurance is based on a state-by-state regulation. So you have a little bit different requirements for each state. So I'll just need you to fill out your basic contact info, first name, last name, phone number, email, mailing address. And that is, just go ahead and you guys can do it right now if you want to. And get something going here for me to be able to show you what this would look like for you. The next thing I need to do a cost estimate is your date of birth, because the qualification largely runs on your age and your health. So also there's a factor of your gender. The pricing is based on your date of birth, your gender, height, weight, and general health history. This is just an estimate. It's not going to give me a perfect answer, but I do need that information. And in order to do qualification and pricing, I need your citizenship. Are you a U.S. citizen? Your current occupation and your annual income. And I will tell you that your income is super important here. I want to explain what gross income minus business expenses plus investment earnings means. So let's just say that you guys had a business that was earning $1 million a year that you were 50% owner of, and your expenses were $400,000 a year for all of your business expenses. That would mean that you would be netting $600,000 a year. And if you're a 50% owner, then that would be $300,000 basically that you would put down on that annual income. And then you would add back in any investment earnings as well. So you do not put in your spouse's earnings for that. It's only your personal earnings, because all of this qualification is based on a single individual, not a household income. The next thing I need is family information, because obviously this is a legacy product, and I do design plans for spouses and children. And it is very important that you guys see all of how this could work together, because it's basically a holistic risk mitigation and wealth accumulation strategy that I do. So spouses, date of birth, health, occupation, income, basic data on them would be great. Children, name, date of birth, health, gender. Finally, I need to know what existing coverage you guys have. Do you have current life insurance? If so, what is the amount that you have, and is it term, whole life, universal? If you don't know all of this stuff right now, it's totally fine. Just put in there a guesstimate of what you have, and then also if you have current disability. And a lot of people have disability through their employer, so you can just put down employer if that's what it is, and we can go over that as well. Or if you have independently owned disability insurance, that's good to know, because that's a part of the Bulletproof Wealth system that I put together for people. So that's what I need on that. And then a financial overview. This is critical so that I know where you're saving and storing money now to try to help you determine how to make it a little bit more more efficient. So basically, real estate investments, do you have rentals? If so, what's the net cash flow on the rental, and what's the estimated portfolio equity? So if you have 5 houses and they all have $100,000 of equity, then that would be $500,000, and they might be producing $400 a month cash flow. So put $2,000 a month cash flow, that kind of thing. And then where you're saving money currently that is non-qualified, that means it's not in a 401k or an IRA. That would be checking, savings, and non-qualified brokerage accounts. So just how much you're leaving there to run your operations on is a good thing to know as well. And how did you hear about me? Just put Think Realty. Any information you'd like to provide, you can throw it in there if you want me to look up something or research something for you before our call. This just makes the call that we do very efficient. And then you hit submit, and it will take you to this link, which is where you schedule your call. And then boom, it takes you to a calendar where you pick a day and time, put in your time zone, and it will allow you to, schedule a time that works for you. And I typically do calls on Tuesday, Wednesdays, and Thursdays, and I would love to help anybody, to do that. So before I move on, that's all good stuff. That's how you get on the books to do something with me. I will just check real quick and see if there's any Q&A. So somebody's asked if the call is recorded. Yes, we got it. It is going to be recorded. That's good. So I will just go over with you guys a few of the typical Q and A's that I usually get. Okay. And that may be helpful. So number one, guys, is what if I already have life insurance? Well, if you already have life insurance, it's totally fine. We will look and see if it's convertible or what it is. You may have a plan that works great already. If not, then I will look into figuring out the most efficient way to either increase or help you replace it or there's a number of options that we have in helping you deal with this. And another question that I get really frequently is, am I too old or young to do this? Okay. So the answer is probably not. I have clients, as young as 1 week old. Okay. And that's obviously their parents are putting it on their children as a 529 alternative plan. And the parents have to have coverage first in order to do that. But all the way up to, I have someone in underwriting now who's 76. Now, typically my average age is between 35 and 55, but I will be happy to try to figure out what you can qualify for. The amount of coverage you qualify for does vary dramatically based on how old or young you are. So that is one of the key factors. And finally, I get this question all the time. What if I don't have the funds right now? Can I still get started? And that is a super important question to be answered. And the answer is yes. You can get started if you don't have the funds right this minute to start. And the way it works is we would do what's called a convertible term policy on you that allows you to capture your insurable interest. And then when you're ready, let's say you have a liquidity event in the future where you sell a property or you get a big raise or something happens where you have funds, you sell some stock. I don't know, what the liquidity event would be, but then we can start a plan and just convert it without having to go back through the whole medical screening and underwriting process. So those are the typical questions that I get traditionally. And let me just check and see if there's any other questions. Hold on. So right now, I'm not seeing any other questions, but if you guys have any other questions, please feel free to put them in there because I'm happy to answer. Okay, I do have a message here from Kim who's asking, is there a way to email the policy terms and fees? So emailing the policy terms and fees, yes, I can do that. And we would do that once we design a policy for you and you can look at exactly what the terms are. Just know that any life insurance policy is a contract between you and the insurance company. And, there's all kinds of, specific terms related to that. And I would be happy to answer any questions in depth once we go into, what you have available. So that's a great question. And I got another question that just came in from Myra. Thank you, Myra. Initially, what % of your contribution is available to borrow back? Okay, that's an awesome question. And Myra, I wish I could answer that in a really succinct answer, but the truth is that it depends on your age and health and how much you're putting in. Okay, so there's so many variables that I really can't tell you exactly, but I can say on the example that I used of putting in $135,000 and having a $100,000 line of credit, that's somewhere in the high 60% range. So like maybe 68, 69% typically is available to borrow against after about 30 days. And one of the things that is so important to know, Myra, is that you're not borrowing your own money, okay? You're borrowing the life insurance company's money, and your money is staying in the policy and serving as collateral. So you're not borrowing funds out of the policy, you're borrowing against those funds. That was an excellent question. So, and we can actually increase that a little bit on that percentage depending on how the policy is structured as well. So there's too many variables to give you an exact percentage though. So great questions. All right. Is there anybody else? I'm just going to stop sharing this.
Hey, Tom, I was going to ask you one or two other questions.
Sure, John.
Is there any cost to schedule a call or to get a plan put together?
Oh, actually, that's an awesome question, John. Thank you for that. So the answer is no. There is absolutely the initial call that you guys book with me is, normally it's $297 to book an hour and a half call with me, but that is waived for you guys on this recording. So when you go to schedule a call, that $297 fee is waived. So I will be happy to do this, and there's no real obligation at all either. This will just be able to give you the opportunity to really be able to see what you can qualify for and see if this would work for you. But there's no cost for the call and no obligation to move forward at all. So that's a great question. Any other question?
Do you want to touch on what the kind of the three elements of the Bulletproof Wealth system are? We talked a lot about what the whole life policy is.
Yes.
Why don't you touch briefly on what the other two kind of elements of the system are?
That's great. So the Bulletproof Wealth system incorporates three primary things. Number one is this whole life insurance policy that we discussed today. And it is really very powerful in what it can accomplish, but it doesn't oftentimes cover your full risk. So many people oftentimes need an additional way to cover their risk. And the second part of the Bulletproof Wealth system is usually a convertible term insurance policy that it's a special type of term insurance that you don't often see, but it allows you to switch it from a term policy, which is very inexpensive, putting in the least amount of money for the most amount of life insurance, to a whole life policy later without having to go back through medical underwriting. And that is where we're putting in the most amount of money for the least amount of life insurance. And you don't have to convert it all at once. It can be converted in increments. And then the third part, or the final part of the bulletproof wealth strategy, is getting your disability protection in place, which is very important, because that is where you are getting actual money coming in tax-free if you're hurt by sickness or injury or anything, so that you can't work. And that, by the way, is exactly what happened to me. And that's how I started the whole bulletproof wealth strategy. Is I had 29-year career in the music industry, and I had a partial hearing loss that prevented me from moving forward in that. And this was going back, a long time ago. But 20 years prior to that, I had purchased a disability policy that ended up paying off and allowing me to go back to school to get the 3 financial designations that I currently have, to be able to teach and help other people, get into a position of maximum financial security if something goes wrong and life doesn't work out as you had planned in terms of being able to work. So the third part of the bulletproof wealth system is a independent disability insurance policy. It's not even from the same company that uses that I do the whole life with, but that is protecting your ability to earn an income, which is really, guys, the most valuable asset you have when you think about it. It really is. So that's another great question. I really appreciate that one. So let me just look here and see if there's anything else. I think that's everything. So there's the link there. It's in the chat. Please go to it, fill that out, get a time on the books to talk with me, and I will be happy to spend time going over how this would actually work for you. And I really am excited about going to Phoenix. I hope you guys can come, and I'll look forward to meeting you live there. And you can hear me talk live, and I can answer any questions that you have there as well. So with that, I guess I'm going to hand it back over, and thank you so much for spending the time to talk with me today. I really do appreciate it.
Thank you so much for joining us, Tom. And be sure to reach out to Think Realty, info@thinkrealty.com, if you'd like to connect with Tom or John or anyone else. We can make sure that we hand you off their contact information. And then, of course, we also have the link that Tom provided to reach out to him and schedule with him directly. Thank you so much.